payment of tax, and you have filed the return. All these four conditions satisfies. Once you satisfy, then only you are eligible to get credit of the whatever the tax you paid on input. First one, document. In simple form, I will say invoice. You should have received the invoice. Then only on that basis you can claim the ITC. Before going to that, ITC means when you purchase any goods, your purchaser's account gets debited. Purchaser's account gets debited. Whatever the GST you have paid, yes, GST account is debited. CGST account is also debited to supplier account. Assume you purchase a value of 1 lakh on which 12% is the rate of GST, 6% SGST, 6% CGST. Total 1,12,000 you will have to make the payment to the supplier. Okay. Whatever the amount you have debited to your GST account, that is called as ITC availment. Availed means making the debit entry in the books. That is also called as taking the credit of the ITC. ITC means input tax credit, taking the credit of the tax. Okay. This is with respect to document you pass the journal entries. That is called as document, which is nothing but your invoice. There are so many things are there. Please go through those document list. For our understanding, we can safely take it as invoice is one of the document. Bill of entry, bill of receipt. There are so many things are there. Normally, invoice will be the tax invoice will be the proper document. Others also document only. For our understanding purpose, we restrict ourselves to invoice. Next, you should have received the goods in your company or the factory. When you purchase the goods, you should receive the same goods or services. Without receipt of goods or services, you are not eligible to claim ITC. You should receive. There are certain exceptions are there. Exceptions we will see. Next, you should have made the payment of this to supplier. Payment of tax to the supplier. That is called as payment of tax. Fourth one, supplier has filed the return of GST for that particular tax period. Then only you can get the eligibility to claim ITC. All these four conditions should satisfy cumulatively. If anything is missing, you cannot claim the ITC for that particular tax period. Once you satisfy all these four, you can claim ITC in that period. Understood? Any doubt? Any confusion in this? Okay. Next. That is every registered person conditions they have given. Here is the condition. Out of this condition A, tax paying document means invoice and other things. They are given the list. Please go through this list. Okay. First one is the document. Second one B, receipt of goods or services. Receipt. You should have received the goods or services, both. Or both. C, tax must have been actually paid to the government, that is payment of tax. Tax should have been paid, that is C. D, furnishing of return, that is filing of return. If all these four conditions satisfies, you should claim, you are eligible to claim ITC. Okay. Now there are certain exceptions. Certain exceptions in the sense, until and unless you comply with this, or we can say proviso. Until and unless you comply with these provisos, you cannot claim ITC. First one, if you have received the goods in lot, that means you have made a purchase order for 10,000 units and you will tell the supplier, first month you send me 5,000 units, second month you send me 2,000 units, and in third month you send me the balance 3,000 units in lot. You can claim the ITC with respect to that value, whatever you are purchasing, only on receipt of the last lot received. When you receive the last lot, then only you can claim ITC. You cannot claim ITC in the first month, nor in the second month, only in the third month when you receive the balance quantity. Balance quantity. Okay. Next, this is with respect to receipt of goods. Exception to that or condition to that. Next, payment. You should have made the value of payment of the value of the goods to the supplier. If you do not make the payment of the value of the goods, including GST, to the supplier within 180 days from the receipt of the goods or the date of invoice, within 180 days from the date of invoice, if you do not make the payment to the supplier, the value along with the tax, you have to reverse the ITC. Reverse the ITC means, please remember this word. Reverse the ITC is nothing but adding the whatever the in ITC you have taken to the output tax. Reversal is nothing but adding your ITC to the output tax, is called as reversal. How many days? Within 180 days you have to make the payment of what? Payment of the value of the goods or services or both, and along with the tax thereon. You should make the total payment to supplier within 180 days from the date of invoice. Okay. If you satisfy these two conditions, if you are receiving in lots, then you have to take the ITC only on the receipt of the last lot, and you have taken the credit on the basis of accrual concept during the month, and you haven't made the payment of the value along with the tax to the supplier within 180 days from the date of invoice, then on the expiry of 180 days, in the next tax period, you will have to reverse the ITC avail, and again you can re-avail once you make the payment. Understood, guys? Okay. This 180 days payment will not apply when you are paying the tax on RCM basis.
Excuse me, sir.
Yes.
Sir, the screen is very blurred.